Hello viewers, welcome to my channel. I'm Hasham. So right now I am doing the problems on recording the transactions in the journal, that is passing journal entries. So last 2-3 videos I have completed 14 short problems and 7 main problems on recording the transactions. See here, in accounting the first step is recording the transactions. So a student of accounting must know correctly how to record the transactions. So the recording the transaction depends on the type of accounts, the rules of accounting, and it needs your practice. First of all, there are 3 types of accounts: personal account, real account, nominal account. And what are those accounts? Already I have explained in the last videos. And then what are the rules of accounting? The basic rules of accounting are: in personal account, debit the receiver, credit the giver. For real account, debit what comes in, credit what goes out. For nominal account, debit all expenses and losses, credit all incomes and gains. So by applying these rules, we pass the journal entries for the transactions systematically. That is the first step in accounting. So if you have watched the earlier videos, definitely you will get the strong hold on this passing the journal entries. And remember, it's very important. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel. Select the subject Financial Accounting 1. Select the topic Journal, Ledger, and problems on journal and ledger. Select those topics, watch the earlier videos, then join now. It will be helpful to you. Now I am going to start the next problem, that is problem number 8. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a hard copy, keep it ready before start watching the problems. Now 8th problem I am reading out. Give the journal entries for the following transactions. So we are given the transaction for the month of April 2009. So see here. Journal entries, date, particulars, LF, ledger, folio, debit, credit. This is the format of journal. Now first, April 1st, 2009. Commenced, started business with cash 10,000. Started business with cash. The owner have invested the money 10,000 rupees in the business and started the business. So cash is coming in. Cash account will be debited. Cash account debtor. Who is the person who is giving the money? The owner. When the owner invests the money, it is called capital. So cash account debtor to capital 10,000. After every transaction, you must write a narration, explanation about this. Starting problems I have written, but now it is due to time shortage and also due to space, I am not writing the narration. You must write it. I am explaining, I am dictating. For this transaction, you should write, being the business started with cash. Next, third, April 3, deposited in SBI. SBI stands for State Bank of India. So the business have deposited some cash with the SBI, with account, bank account. So cash is going out. So cash account is credited. Now who is the receiver? Banker is the receiver. So debit bank. Entry will be bank account debtor to cash. Bank account debtor to cash account. Because cash is going out, cash is credited. Bank is the receiver, bank is debited. Amount is 6,000. Narration, being the cash deposited in bank. Next, fifth, bought goods from Mahavir. Bought means purchased. Purchased goods from Mahavir. Name is given, so it is a credit purchases. We have not paid the cash. We have purchased the goods on credit. Then whenever goods are purchased, purchases account should be debited and the party account should be credited. The supplier account should be credited. So entry will be purchases account debtor to Mahavir account. Purchases account debtor to Mahavir, being the goods purchased on credit. Next, sold goods to Gupta. Sold goods to Gupta. It is a credit sale. We have not received the cash. We have sold the goods to a person. The person is Gupta. So Gupta is the receiver. We are selling the goods. Gupta is receiving. So debit Gupta. Gupta account debtor to sales. So remember one point. When we purchase the goods, debit purchases. When we sell the goods, credit sales account. credit sales account. So entry Gupta account data to sales 650, being the goods sold on credit. Next, paid cash to Mahavir 990, discount received 10. Discount received is an income, so it should be credited. Discount received should be credited. Cash is paid, so cash account should also be credited. I told you in the previous videos, when we receive the cash, debit cash. When we pay the cash, credit cash. Cash is going out. How much cash is going out? 990. So cash account credit column 990, discount received credit column 10. 990 plus 10, 1000. So Gupta account should be, Mahavir account should be debited by 1000. Paid to Mahavir. So entry will be Mahavir account debtor 1000 to cash 990 to discount received 10. See here. Cash Mahavir account debtor 1000 to cash account 990 to discount received 10. Being cash paid to Mahavir and discount received. Being cash paid to Mahavir and discount received. Next one, cash received from Gupta 625. Cash is received, so that means cash should be debited. So cash account debtor 625 because cash is received. And discount allowed is a loss. It should be debited. Discount received is gain. It should be credited. Discount allowed is a loss. It should be debited. So entry will be cash account debtor 625, discount allowed account debtor 25. 2. Who is the giver? Gupta. Cash is received from Gupta. So Gupta's account should be credited by 650. 625 plus 25. 650. Being cash received and discount allowed. Next, furniture purchased. It is a cash purchase. Name of the party is not given. So it is a cash purchase. That means we have purchased the furniture and we have paid the cash. The furniture is coming in. Cash is going out. Debit what comes in? Furniture is coming in. Furniture account debtor. Cash is going out. Cash credited to cash. Furniture account debtor to cash account. 300. Being the furniture purchased. Next one, drew cash from bank for personal use. Drew cash from bank for personal use. When the owner withdraws the money for personal use, it is called drawings. The entry will be drawings account debtor to bank. So drawings account debtor to bank account 600. Narration, being the cash withdrawn from bank for personal use. Rent paid by check. Rent paid. So rent is an expense and all expenses should be debited. So rent should be debited. So rent is paid either in cash or through check. It is paid through check. So bank. Credit should be given to bank. Entry rent account debtor to bank. Being rent paid through check. Last one, salary due to clerk. If first of all, salary is an expense. So salary account should be debited just like rent. Rent, salary, both are expenses. Both should be debited. The salary account should be debited. Is it salary paid or due? It is due. It is given in the problem salary due to clerk, not paid. If it is paid, it would have been salary account debtor to cash. If it is paid, then salary account debtor to cash. It is not paid. It is outstanding. The due is called outstanding. So entry will be salary account debtor to salary outstanding account. See here. Salary account debtor to salary outstanding account 300. Being the salary due to clerk. That's it. So these are the journal entries for problem number 8. Now I am moving on to problem number 9. Journalize the following transactions. Again, December. The transactions are given for the month of December. See, journal entries, December 1st. Pramod commenced business with 45,000. Pramod is the owner, proprietor. He is commencing the business with 45,000. Cash is coming in. Cash is coming in. So cash account should be debited. Cash account debit. Who is investing this money? Pramod, owner. When the owner invests the money, it is called capital. So entry will be cash account debtor to capital. Being the owner started the business, or being the business commenced with cash. Next, 4th December, cash deposited into corporation bank 20,000. Cash deposited into bank. So cash is going out. So cash should be credited. Who is the receiver? Bank. So bank should be debited. Bank account data to cash. Bank account data to cash. Being the cash deposited in bank. Next, 6th December, goods purchased for cash. When we purchase the goods, goods are coming in, cash is going out. So entry will be purchases account data to cash. Purchases account data to cash account. Being the goods purchased for cash. Next, 10th December, goods sold to Gopi for cash 7,020. Goods sold to Gopi for cash. When the transaction is cash transaction, we should not consider the name of the person. We are not concerned about the name of the person. Goods sold to Gopi because he is paying the cash. Why to record his name? We are selling the goods to Gopi and Gopi is paying the cash. Immediately he has paid the cash. So Gopi's account should not come. So sold goods to Gopi for cash. Cash is coming in. Cash account data to sales. We have sold the goods. So cash account data to sales. Being the goods sold for cash. Then 15th. Purchased furniture 2,800 by check. Furniture purchased and check issued. When we purchase the furniture, furniture comes in. The furniture account should be debited. And bank account should be credited because we are issuing the check. Entry, furniture account data to bank. Here furniture account data to bank. Being furniture purchased and check issued. Next, borrowed 2,000 from Narahari. Narahari is the lender. He has given the loan. So this business has borrowed the money, means taken the loan from whom? From Narahari. So first of all, when the loan is taken, cash is coming in. We are taking the loan in the form of cash. So cash is coming in. So we debit cash account data. 2. A new account is opened, loan account. We'll write the name of the person who is giving the loan, Narahari. So we'll write down cash account data to loan from Narahari. Loan from Narahari is a liability. Cash is coming in, cash is debited. And loan from Narahari is credited. Being the loan taken from Narahari. Then commission received from Hari. Commission received from Hari. We are not concerned with the person. We are receiving commission, so cash account should be debited. Why we are receiving the cash? Because of commission. So commission is an income. We are receiving commission, commission is an income. So commission should be credited. So entry cash account data to commission. Being commission received, we are not concerned with the name of the person from whom we receive the commission. Then purchased goods from Krishna 2,000, trade discount 2%. Now remember one point. Trade discount is the discount which is allowed by wholesaler to retailer or manufacturer to wholesaler. It is the reduction in the catalog price. The catalog price was 2,000 and trade discount will be deducted from catalog price. So 2% of 2,000 it comes to 40. 2% of 2,000 comes to 40. So 40 rupees deduct. Deduct 40 rupees. So 2,000 minus 40, 1,960. So we are purchasing the goods for 1,960 only. The trade discount will not be recorded. The trade discount will be deducted from the price and the net amount will be recorded. So 2,000 minus 40 is equal to 1,960. So when we purchase the goods, entry will be purchases account data to Krishna, from whom we have purchased, Krishna. So purchases account data to Krishna account, 1,960. 2,000 minus 2%. 2% is 40 rupees. So 2,000 minus 40, 1,960. Being the goods purchased on credit. Next, cash withdrawn from bank for office use. Cash withdrawn from bank for office use. Cash is coming in. Cash account data. Who is the giver? Bank is the giver to bank. तो cash account debtor to bank account. Being the cash withdrawn from bank for office use. Next, 27th. Goods distributed as free samples. See, normally, a business organization will distribute the goods to the customers freely. Why it distributed? What is the logic behind this free distribution of goods? The logic is it's a form of advertisement. We want to promote the business. We want to attract the customers. So we are providing free of cost goods to the customers. So this free of goods we are distributing to customers is in the form of advertisement. It is advertisement. So when goods are freely distributed, advertisement account should be debited and purchases account should be credited because we are distributing goods. We are distributing goods. Goods are going out. So advertisement account debtor to purchases, being goods freely distributed to customers. Next, paid for charities. Paid means cash is going out. So cash should be credited. For what cash we are paying? For charities. So entry will be charities account debtor to cash. Charities account debtor to cash, being cash paid for charity. Next one, paid office manager's salary to Jayaram. One office manager is there, his name was Jayaram, and salary is paid. Remember, when salary is paid, we are concerned with salary. We are not concerned with the name of the person, Jayaram. Nothing to do with Jayaram. We are paying salary in the form of cash. Cash is going out. So cash should be credited. For what cash is paying out? For salary. Salary is an expense. Salary is an expense. So salary account debtor to cash, being salary paid. That's it. So these are the transactions for problem number 9. Now I am moving on to 10th problem. Journalize the following transaction in the books of Subham. 2015 January. So we are given the transaction for January month. Books of Subham, journal entries, date, particulars, LF, debit, credit, 2015 January 1st. Commenced business with cash rupees 1 lakh, building valued 5 lakh, and stock rupees 40,000. Previous problems, the owner have started the business with cash. But in this problem, the owner is starting the business not only with cash, but he is bringing in building, he is bringing in stock. So 3 things the owner is bringing into the business. What are the 3 things? He is bringing in cash, he is bringing building, and he is bringing stock. So whatever comes in the business, that will be debited. So in the business, cash is coming in. So I debit cash account debtor 1 lakh. Apart from that, the business is getting the building also. The building account debtor 5 lakh. Apart from that, the business is also receiving the stock. So stock account debtor 40,000. These 3 assets are coming in. So all the 3 assets are debited. Who is the giver? Who is providing all these 3 things? Owner, proprietor. When proprietor invests money or anything into the business, it is called capital. When the owner invests the money or the owner brings the assets into the business, it is called capital. So to capital account, add up the 3 amounts, 6,40,000. Being the business started with cash, building, and stock. Being the business started with cash, building, and stock. Then second, deposited into bank. Some cash is deposited into bank. Cash is going out. Cash should be credited. Bank should be debited. So entry will be bank account debtor to cash. Bank account debtor to cash, being the cash deposited in bank. Fourth, sold household furniture for 10,000 and invested the money into the business. The owner has sold the household furniture. It says personal matter. We are not concerned what he is selling, what household item is selling. So sold household items for 10,000 and that 10,000 he is investing in the business. That means in the business 10,000 rupees are coming in. Cash 10,000 rupees are coming into the business. So cash account debtor. When the owner brings the cash, it is called capital. It is called capital. So cash account debtor to capital 10,000. We are not concerned that the owner has sold the household furniture. We are not bothered. The owner has invested 10,000 in the business. So cash account debtor to capital 10,000. Being the cash introduced by the owner. Then withdrawn cash 5,000, goods cost 6,000, selling price 7,500 from business for personal use. When the owner takes the cash or goods from the business for personal use, it is called drawings. If he withdraws cash, it is drawing. If he withdraws goods, that is also drawings. So totally how much? 5,000 rupees cash and 6,000 rupees worth of goods. We should not take the selling price. Selling price will arise when the business sells the goods to the customers at a profit. Selling price includes profit. But when the owner has taken the goods for personal use, he will take the goods not at selling price but at the cost. So what is the cost of the goods? 6,000. And how much cash? 5,000. So 5,000 plus 6,000, 11,000. So drawings account debtor 11,000. Drawings account debtor 11,000. Out of 11,000 he has withdrawn cash 5,000. So to cash 5,000. When he withdraws the goods from business, purchases account should be credited. When the owner withdraws the goods for personal use, purchases account should be credited. So to purchases account 6,000. Being the cash and goods taken by the owner for personal use. Next, paid life insurance premium 10,000, income tax 9,000 and bicycle for son 5,000. Paid, that means the business has paid. The business has paid 10,000 rupees for insurance of the owner, premium, insurance premium of the owner, and income tax of the owner 9,000 and bicycle to the son of the owner 5,000. All these are the personal expenses. Actually, life insurance premium should be paid by the owner from his pocket. It should not be paid by the business. Similarly, income tax is the obligation of the owner. He should pay it from his pocket. But here business is paid. Then similarly, the bicycle to son, it's an expenditure to be borne by the owner from his pocket. So these three expenses are personal expenses of owner, but it is paid by the business. So it will be called drawings. It will be called drawings, all the three. Insurance premium paid, income tax paid, bicycle to son. All the three which are paid by the business will be debited to drawings account. So entry, drawings account debtor to cash 24,000. 10,000 premium, 9,000 income tax, 5,000 bicycle. Being the insurance premium of the owner, being the income tax and cycle to son paid by the business. Next, 12th. Paid rent to 6,000 by check. Half of the building is used for residential purpose of the proprietor. One building is the rented building. The rent of the building is 6,000. And this 6,000 rent is paid through check. Paid through check. But the whole building is not used for the business. Half of the building is used for the business and half of the building is used as residence for the proprietor. That means only 3,000 will be a business expenditure. Remaining 3,000 is a personal expenditure because the building is used for his residential purpose. So how much money is going out from the business? 6,000. 6,000 rupees check we have issued. The bank account is credited by 6,000. Out of 6,000, how much is the rent of the business concern? 3,000. The rent account debtor 3,000. Drawings account debtor 3,000. Because the rent of the residential portion, the rent of the complete building 6,000. Half building is used for business, half building is used for residence. So 3,000 rupees should be charged to drawings. So rent account debtor 3,000, drawings account debtor 3,000, to bank 6,000. Being the rent of the building and rent of residence of proprietor paid through check. Next, 16th. Charge rupees 10,000 interest on capital and provide interest on drawings 500. So two separate transactions. Charge 10,000 rupees as interest on capital. So interest on capital is an expenditure. It is payable to the owner because owner has invested the money in the business. So they have made a rule that the business will pay interest on capital to the owner. So entry will be interest on capital account data to capital account. The capital account should be credited. His capital will increase. So interest on capital is an expenditure. It should be debited. And capital account should be credited. By crediting capital account, the capital will increase. Being the interest on capital provided. Being the interest on capital provided. Similarly, interest on drawings 500. Interest on drawings 500. So entry will be capital account data to interest on drawing. From business point of view, interest on capital is an expenditure. Interest on drawing is an income. Interest on drawing is an income. So interest on drawing should be credited and capital should be debited. So capital account data to interest on drawing. Being the interest on drawing provided. Last one, received refund of income tax rupees 1200. Actually, income tax paid is not a business expenditure, it's personal. Similarly, refund of income tax is an income of the owner, personal income. But here the business has received the income tax refund. So cash is coming in, so we debit cash account. But actually this income tax refund is not a business income. It is the income of the owner. It should go to owner. But here business has received. So cash account will be debited, capital account will be credited. Because this refund of income tax belongs to the owner. And owner has invested in the business. So cash account data to capital 1200. Being the income tax refund received by the business. That's all. So this is the end of problem number 10. So far we have completed 10 problems on recording the transactions in journal.